Hello, and welcome to day two of the 2024 US Expats Finance Conference, brought to you by AmericanExpatDirectory.com and sponsored by Expat Focus, the web's favorite destination for anyone moving or living abroad. We have a fantastic schedule for you consisting of 9 sessions over 3 days, covering multiple aspects of financial information for Americans living abroad, with perspectives from some of the world's foremost experts in their fields. Today is the second day of the conference, and for this, our second session of the day, I'm delighted to be joined by Shane Clark from Euro American Financial Advisors. We'll be talking about financial planning considerations for Americans living abroad. Before we get started, though, please bear in mind that the information presented is for general educational purposes only, and you should always seek your own personalized financial advice. Please note also that Shane will be answering your questions at the end. But please add them in the Q&A pop-up at the foot of your screen whenever you think of them, and we'll try to answer them all, time permitting. So without further ado, over to you, Shane.
Thanks, Hugo. And thank you, everybody, for attending. I hope I have some useful and helpful, interesting information for you today. So before I jump into the presentation, I'll just give you a little background on our firm and myself. My name is Shane Clark. I'm the president of our firm name, Euro American Financial Advisors. We tried to pick a name which didn't leave much to the imagination. So as you might have guessed, we provide investment advice for American expats in mostly Spain, Portugal, France, Italy, the kind of the regional countries from us. But also the EU in general. We can passport with our license anywhere in the European Union. And from that license, we are licensed by the Spanish investment authorities to provide investment advice and financial planning services. I think, as Hugo mentioned earlier, we're headquartered in Sevilla. And a little bit of background on myself. I've been an expat for around 15 years now, originally from Detroit in the US. Kind of escaped the northern winters there, moved to Spain. And I think our services are pretty unique in that we are really focused on US expats in the EU. So we understand the nuances in the tax situation that Americans face. We'll dive into all of that later on. But we also, I should mention, we have a sister firm in the US, International Asset Management, which is based just outside San Francisco. And it's run by my partner, Tom Zakistel, who's also presenting after this session. And his firm has been around for 22 years, providing investment advice, financial planning, and portfolio management services for American expats. I think we have clients in 35 countries. So we've seen a lot of different situations over the years. And that's really, given us a good knowledge base on understanding questions we should be asking if you might not think of them, to lawyers, tax people, and really just kind of understanding the expat journey a little bit more ourselves. So with that, I'm going to share my screen here, and I prepared a little presentation. All right, can anybody see that? All right. So jumping into it here, I want to talk about financial planning considerations for American expats. I'm going to give a kind of a brief summary of the foundation of what creates all these problems, I guess, or complications being an American expat versus being an expat from any other country or living in the US outright. And then we'll talk about some expat considerations that we have within our firm. When you become an expat or you join us as a client, we go through a checklist and we review, things you should bear in mind before you become an expat, before you move, maybe just after you've moved, and then things you should keep in mind even if you've been an expat for maybe 20 years. I'll talk about some of the top 5 financial planning issues, some general notes for your portfolio as an expat, things that you might not consider if you've lived in the US your whole life that you need to be aware of, and ways to diversify. And then I'll also discuss how to choose your advisor, questions you should be asking. And then, the big one, mistakes to avoid at the end. So this is kind of the foundation of what creates the headache part of being an expat, is this middle tile there citizenship-based taxation. So the United States is quite unique in the sense that we have citizenship-based taxation, unlike all but one other country in the world. And what that means is you always have to file a US tax return, regardless of where your country of residence is. So, for example, you move to Spain, you have to file a tax return in Spain every year. You also have to file a tax return in the US. And that's different than most countries in that if you are from the UK, for example, and you move to Spain, typically you're only going to be paying taxes in Spain. You might have some investment properties in the UK, but for the most part, this is a unique thing about being an American. And it creates a lot of nuances, particularly on the tax side, for how you need to make sure you don't make any mistakes, from an investment standpoint, from filing taxes, inheritance, estate planning, all these types of issues. So that's really the core, which leads us to some of these other tiles. So if we start at the top, filing US returns, it's important to work with somebody who's an expat tax preparer, but not just that, someone who specializes in your country of residency. So I'm going to use Spain as an example often because we're based here. But if you're living in Spain or any other country, you want someone who understands the joint tax treaty between the US and that country. And those nuances are what's going to, potentially save you hundreds of thousands of dollars in mistakes. So the next tile we have is FATCA, the Foreign Account Tax Compliance Act. And that was a piece of legislation passed in the US around 2012, which essentially means financial institutions, both in the US and abroad, need to report to each other your account information. So if you move abroad, you open a bank account, an investment account, that organization needs to report to the tax authorities in the US that you've opened this account. So a lot of you are probably familiar, you try to open a bank account, there's a whole series of extra forms if you're from the US. These are those FATCA reporting forms. Now, how it affects your US accounts is some of you might have received a letter when you become an expat from your US broker, Fidelity, for example, and they say, hey, we've noticed you've moved abroad. We can no longer work with you. And that's because of FATCA. It's a very small portion of their client base, these US institutions, for example, who have expat clients. And it's not really worth it from a revenue standpoint for them to do all the additional compliance things. So they just stop working, kind of as a general company-wide rule. Sometimes they freeze your account, they make it so that you can't add to any existing positions, or worst case scenario, they close your account, send you a check. We have had an example of that before. The next tile is FBAR. That's what it used to be called, Report of Foreign Bank and Financial Accounts. And this is a tax reporting form you have to do to the US IRS every year that reports if you have a bank account abroad or an investment account that goes over $10,000 at any point in the year, or if you have multiple accounts that go over $10,000. PFICs, here's a fun one, passive foreign investment companies. Now it's very nuanced, and you want to make sure you talk to a qualified tax advisor when you're preparing your US returns. But essentially a PFIC is any foreign mutual fund or exchange traded fund. And if you were to buy one of these products, a UCIT fund, they're called in the EU. Say you go to a private bank, you want to invest, they open an account, no problem. They sell you a bunch of funds. It seems like a normal transaction. When you file your US tax return, the IRS taxes these very punitively because they don't want you to have money abroad. That's kind of the idea behind it. And by punitively, they can be taxed as high as your ordinary income rate in the US versus a capital gains rate. Anything you'd have as a gain on those funds. So we always advise to avoid them, and your tax preparer will certainly advise even more. For each PFIC you own, I've been told it takes up to 40 hours to complete the form that the tax preparer needs to do to file your US taxes. So, one, they don't want to do that. And two, it's going to be quite costly to you. And we can talk more about it, but in general, PFICs, they're going to be more expensive than the same product you could get in the US. So if you want to get exposure to the S&P 500 and you buy a European-based investment vehicle, the cost the management fees, the transaction costs, of buying the fund are going to be more expensive than if you invest in the US anyway. The next one is the Markets in Financial Instruments Directive, or MiFID, if you're familiar with that. There's already MiFID 2, MiFID 3 is on the way. In the EU, they certainly love to legislate. So it's a good thing for clients. It creates extra layers of protection. This is, as a firm who's licensed in the EU, this is something that we have to follow the directives based, for firms like ours. And I think it's a good thing to be aware of because you have different and sometimes more protections as a client in the EU than you would have in the US. So firms who are licensed in the EU, have they issue different documents to you throughout the year with more information about things you should be aware of, and just another piece of legislation there. PRIPS is packaged retail investment and insurance-based products. And this is a question a lot of people ask me about. Why can't I buy US exchange traded funds living in the EU? Well, this is why. PRIPS. US-based exchange traded funds are supposed to produce a fact sheet, which is called a KID statement. That's what MiFID 2 dictates. You have to produce this fact sheet for EU residents. So US funds don't produce this fact sheet, so they can't give you access to these US funds if you're living in the EU. So that's one of the reasons why you can't buy US exchange traded funds. Now, there are some workarounds depending on which US custodian you use. Two custodians we use are Interactive Brokers and Charles Schwab. And it's even further complicated in that each custodian takes a view on this PRIPS regulation. So for example, Charles Schwab, if you go through an institution as a client, so if you're living in the EU, you go through an institution to open your account, such as a US-based registered investment advisor, then you're classified as an institutional client versus a retail client. You'd be a retail client if you just went on charlesschwabinternational.com and opened an account. So that'd be a retail versus institutional. If you're an institutional client, you can own US-based exchange traded funds, which is a good thing. It gives you an easy access to creating more diversification for things like emerging markets or different products that way. So that's kind of an overview. Hopefully that wasn't too boring of some of the reasons that complicate things as an expat. So now jumping into the expat checklist. As I said, this is something that I think it's important to do whenever you are reviewing your financial situation as an expat. If you're pre-expat, before you've moved, if you've just moved, there's a lot of things as you're becoming a tax resident you need to be aware of, and then some ongoing issues. I'm just going to go through some of these to kind of create a clearer picture there. So visa, what visa you enter a country on is extremely important. Using the EU as an example, Spain, if you're entering Spain and you're planning on working, there's, I believe, 7 different visas that you can enter on. And then within those visas, there's different tax regimes that you can claim on your tax return. So one of them is called the Beckham tax regime. And that essentially gives you much better tax benefits in terms of what you have to pay in income tax and whether or not they tax you on your worldwide income or not versus the normal tax regime. So when clients first come to us, we go through this checklist. We say it's very important to get on the correct visa and tax regime before you enter the country. So it's important to speak with a tax attorney who understands your situation and what options are available to you. Residence permit. This is one that's kind of it's a bit of a pain. A lot of places, once you move, you have to obtain the residence permit. Oftentimes you have to go to an office. Typically you need to have 15 forms, photo ID, all these types of things. You get there, everyone's heard the story. They tell you, but you don't have this form. Oh, but you don't have that form. And even if you have every form that's on the website, usually it's a couple trips back and forth to the local kind of bureaucracy. Well, in different countries, there's different people who can do all this for you. In Spain, Portugal, France, there's people called gestores, at least here. and they help with the administrative burden of these types of things. So it's always, knowing these little nuances can save you a bit of a headache. So we have different gestores we work with in those countries to help you ease in the process. Real estate, this is a big one, both in terms of what you do with your existing real estate before you become an expat. Your house in the US before you move anywhere will probably be treated differently in terms of taxes if you sell it before you move or after you move. And it's important to know all of those nuances in the joint tax treaty between the two countries, because you could potentially be paying much more in capital gains on the sale of your house if you are a tax resident in the next country than you would be in the US. And then also we look at, once you move, is it better to rent? Is it better to buy? All those types of issues. Private health insurance, we can help put you in touch with folks who can, guide you in selecting a good health insurance plan if you need that as part of your visa requirements. US brokerage account issues. This is probably one of the main reasons people change who their financial advisor is once you become an expat, you often get that letter, we can't work with you anymore. You do a Google search, who can I work with? And that's what I mentioned before with Interactive Brokers and Charles Schwab. They both work with, US citizens in different countries. Interactive Brokers works with US citizens in almost every country in the world. They're quite a good firm. They have many benefits, from multi-currency accounts. They have low trading costs. It's a relatively straightforward application process. Pretty good user interface. Charles Schwab, on the other hand, you can own, if you are an institutional client, you can own these US exchange traded funds in many cases. The downside is Schwab doesn't work with US citizens in as many countries. Like they don't take clients in Italy, for example, France, the Netherlands. It depends on which country you're moving to for which firms you can work with. And as an added bonus, they change those lists every year. So that's another interesting thing to keep on your mind. Relocation services, we don't partner with anyone on that, but we do have different clients will share with us horror stories or happy stories of their relocation services companies they worked with. I said learning Spanish as an example, but learning the foreign language in the country you're moving to, we can help advise on that if needed. And then filing your US and local tax returns. As I said before, having a specialist US tax preparer who is understands the nuances between the US and that country that you're moving to is paramount. And I think that, this can be helpful to do some research beforehand and find the right person. Filing or currency transfer is another one. There's many different ways you can transfer currencies. You can use a broker like Wise, Spartan FX, OFX, companies like that. You can use your bank. You can use your broker, like Interactive Brokers. So there's many different ways to do it, and we can help advise on the best situation for you. Creating an investment plan and sticking to it. A case that is easy to look at is what happened during COVID. Right in March when the market sold off, it was a very scary time. A lot of people wanted to sell out. They thought this could be the end of the market. We had quite a V-shaped rebound there. So, really sticking to the plan, having an advisor and listening to them, I think is quite important for your long-term wealth. Bank accounts, as an American, it's really hard to maintain a US bank account. It's hard to maintain your credit score as well, which is something we review every year, ways to do that. We do have a couple banks you can work with, which we can, discuss if you need help there. And then, I don't want to get too bogged down, but once you move, there's some issues reviewing your residency permit for the real estate, considerations on your children with education or what benefits are available from, potentially the US government. And then long-term, we can look at what long-term healthcare options look like in your country, what type of government benefits you might be eligible for. For example, if you paid into US Social Security for 15 years, and then you move abroad and you pay into the Spanish Social Security system for 5 years, which country is going to pay out your benefits? So we do some calculations on that as part of our financial planning, and we can look at how you can transfer credits or who's going to pay you. Excuse me. So that's all included in the financial planning process. All right, moving on to the top 5 financial issues for US expats. I've listed 5 here: financial planning, custody, tax issues, and then portfolio considerations, and the different types of assets that you can and cannot buy. So we'll jump into that. So financial planning. Some of you might be very much aware of what a financial plan is and why it's beneficial. Some others not. So I'm just going to kind of start from the standpoint that we're starting from zero. So a financial plan is a kind of a comprehensive overview of your current financial situation and any goals that you want to achieve. So we always say there's 2 elements to it. There's the financial numbers part, and then there's the non-numbers part, which is incorporating your goals, lifestyle, different decisions that you might find important. The number side is easier to discuss, I think, from a financial standpoint. So we create 3 financial statements: personal income statement, statement of cash flow, and a balance sheet. So we're essentially looking at what are your global assets like today? Where are you at for the balance sheet? We look at your cash flow to see what kind of money's coming in and going out. And then we look at your income statement, personal income statement, to look at your revenues versus expenses and see, how things are going to change potentially once you become an expat, and maybe the cost of living is lower or higher, depending on where you're moving to. And then we try to incorporate any goals or, let's say, actionable items that might be coming in your life. So if you have goals such as you want to pay for your grandchildren's education, or you want to buy a beach house in 10 years, or anything like that, you want to buy a luxury car, anything that is a big outlay of capital, we can incorporate into the plan and see if it's possible. If it's not possible, how aggressive or conservative we need to be with your investment accounts. And then also for estate planning purposes, if you're a resident in France and you're receiving an inheritance from the UK and you have US citizenship, we can look at what does that mean from an estate planning standpoint in finance, and then who you need to work with in terms of attorneys, tax advisors, to make sure everything is correct. So the last point I have here is the financial plan helps inform the investment plan. And I think that's really important in that, once we have this document and we treat it as a living document. So anytime you have a change in your life, we update it. But once we have this document, we can see, okay, this is what retirement is going to look like for you. How do you feel about that? If we say you're going to get, 10 grand a month, this is what your expenses look like. This is how we've invested the money today. Do we need to be more aggressive? Or in many cases, we might need to be less aggressive. If you say you just sold shares in your company, you have a huge chunk of capital you need to invest. You've been aggressive your whole life as an investor. Maybe now is not the time to be aggressive. Maybe you should be more conservative. So we look at all these types of decisions, work with you on it, make a plan that you feel comfortable with. Custody, I've talked a little bit about this. It's where you custody your assets. So which broker or custodian do you use to actually physically hold your capital? So an example of a custodian is Charles Schwab, as I said, Interactive Brokers, companies in the US you want to be familiar with, any of the big banks, Goldman Sachs, they all custody assets. Northern Trust is a big one. But a lot of those companies don't work. Fidelity, they don't work with US expats. So finding someone who can actually work with you and you can use your foreign address with is very important. You probably read blogs where people say just use a US address, it's going to be fine. Maybe. So the downside of that, if you use a US address, say it's in the state of California. California has a state tax. So every year, your brokerage account is going to be producing 1099s. They go to the state tax authorities. Now, they might look at your tax situation and say, hey, you're not paying taxes here, but you live here. What's going on? So there's ways, you can solve that going back and forth with letters, hire an attorney, explain you're an expat, or just work with a custodian who is happy with you using your foreign address. So that's part of our job is, risk mitigation and solving problems before they're created. So our advice is to keep your money in the US, use a US custodian who's happy with you being an expat, and use the address in the country of residence you live in. If you're living abroad and you wish to use a foreign custodian, for example, a private bank, say you live in Italy and you want to invest in an Italian bank because that's where you live. I think it's important to ask why. Why do you want to do that? If you look at it from a cost standpoint, it's almost always more expensive for Americans to invest abroad than in the US in terms of custody. There's going to be custodian fees, there's going to be trading fees, and those are always much higher than they are in the US. The US, in the early 90s, we had a lot of competition in financial markets, and it did what hopefully the market should do and push prices down. So the prices of trading are extremely low, the prices of custody, all those types of things for US markets is very, very clear and transparent compared to a lot of foreign markets. So the fees are always going to be lower. And then accessing your assets and liquidity is always extremely high in the US. We have the highest volume of trades of any market in the world, with the New York Stock Exchange and the other ones. It's a good place to hold your assets. And if you want access to specific foreign companies, a lot of them are duly listed on their national exchange and the US exchanges, companies in China, all over the world, a lot of them have a dual listing. And like I said before, it's the lowest transaction costs. So tax reporting, this is another important reason to have your assets in the US, is when you file your US returns every year, you're going to need 1099s. You're going to need to be able to show all of these types of documents to your US CPA. And the US custodians prepare all of that. So worst case scenario, say you get audited by the IRS, you want to have all these documents that you need. And it's just another risk mitigation technique. Also, safety, US brokerage accounts have SIPC insurance, which is much higher than foreign brokerage account insurances. Let's hope there's never another financial crisis, but probably there will be someday. It's important to have these types of insurances and risk mitigation things in place just to protect your assets. Compliance, yeah, I already covered that. IRS reporting, FATCA, FBAR, having all of the right information to prepare these forms for the IRS is important. So again, our recommendation is to keep your accounts in the US. Tax issues, understanding the joint tax treaty, filing in the US every year, filing your country of residence every year, and there's every country's different when their tax calendar year is. So, here, for example, you typically file your Spanish taxes first. The due date is the end of June. Then you get an extension either until the end of June or, sorry, not the end of June, but October for the US filing, and you file your US taxes separate. So it's important to work with somebody locally who understands that as well and is willing to kind of work with you and your US accountant to file your local taxes every year. And then regarding your investment portfolio, avoiding, punitive PFIC taxation is very important. Understanding what retirement benefits you can access and understanding how your retirement accounts are going to be taxed is really important. And some countries, Portugal, for example, how Roth IRAs are treated is a gray area. So I've had lots of people say, I spoke with this guy and he gave me this answer. I spoke with her, she gave me a different answer. They both could be right. It's a gray area. A lot of the joint tax treaty on Roth IRAs it's not clear. So depending on which agent you get within the foreign tax authorities could be how they determine how that's going to be treated. And there's cases in Portugal right now, for example, before their version of the Supreme Court that are being reviewed to have a ruling. But until something like that happens, it's a gray area. So it's important to have somebody who's seen these different scenarios and advises you, again, like in a risk mitigating scenario, if you take an aggressive stance, it's a risk. So I think it's important to work with professionals on that. Yeah, and then something that we always look at is managing your portfolio in a tax efficient manner. And that's, coming from the US, it might be very different than in Europe. But in the US, it's important to have a portfolio that is tax efficient. So your understanding of tax efficiency than once you become an expat. So in Spain, for example, there's wealth tax in different autonomous regions of Spain. Barcelona, Valencia. We don't have wealth tax in the US. So you might not even be familiar with what that entails, how you're taxed on it, and how we manage your portfolio impacts how much you're going to pay in wealth tax. So it's important to work with somebody who understands all the nuances within your country of residence. And then addressing the cross-border tax implications within your financial and estate plan. The intergenerational wealth aspect of that is very important, and working with usually a tax attorney who understands the US and the local taxes to make sure that you're not avoiding anything that you should be doing, or beforehand, structuring things in the right way to mitigate any taxes as well that you shouldn't have to pay. Continuing portfolio considerations. So currency, that's a big one. If you've lived your whole life in the US, you've got expenses in US dollars, you've got your investments in US dollars, you've never had to worry about currency risk. Now, if you're moving to the EU, the euro is a strong currency as well, so that's a little bit different. But if you're moving to some other countries in the world, where Argentina, for example, the currency there is extremely volatile and always kind of has been. So it's important to manage your investment account to account for currency risk. Now, kind of the old adage is matching your currency denomination of investments with your expenses. So some people think, I'm moving to Europe, all my money should be in euros. Well, since you're coming from the US, that's not necessarily the case. The US dollar historically has been the strongest currency, and whenever there's a geopolitical event or turmoil in the markets, the dollar tends to strengthen relative to other currencies. It's kind of the safe haven for the time being and for the foreseeable future in our look. So I think, managing currency risk is extremely important, and I think that there's many ways to do it. It's something that we actively do in our portfolios, and I think these are questions you should have for your financial advisors. How do they manage currency risk? So the next one is, I'm using euro as an example, euro-denominated funds in the US? Absolutely, you can. You can buy, if you use Charles Schwab, for example, you can use US exchange-traded funds that are denominated in euros to get exposure that way. There's many ways to get exposure to the euro. So our recommendation is invest in a diversified multi-currency portfolio of global assets. So the types of assets you can buy is also important. We talked about avoiding PFICs. And for example, if you're living in France, Charles Schwab won't take clients from France. Interactive brokers won't let you buy US exchange traded funds. So what do you buy? How do you invest? This is something that we do in-house. We build all stock equity investment portfolios. I should say on the equity side, it's all stock portfolios. So we're diversified that way. If you have to do this yourself, it can be quite tricky building an all stock portfolio that's globally diversified. And then looking at risk, there's many different risks once you become an expat, but then there's also a lot of the traditional risks in an investment portfolio that you need to account for and balance. Expenses are another one. And I think when we say expenses, it's important to take a holistic view on what the fees you're paying are for your investment accounts. So if you look at, this is a conversation I had last week actually with the client, the prospect. If our fee is 1% based on the assets we advise, if you are currently paying, let's say 0.75%, we're more expensive. But then if you look at the underlying instruments in your account, if you have mutual funds, they could be anywhere from 0.5% to 1.5%. If you're paying trading fees, those add up as well. Custody fees. So my point is, you need to look at the holistic view of expenses and add up all of those layered expenses to then accurately compare two different advisors from a fee standpoint. And then also from a service standpoint, like what additional services are you getting with one advisor versus another one? So we always try to look at what can we control as advisors. We can control risk, we can control fees. It'd be nice if we could control the market, but we haven't figured that out yet. Tax management, is another thing that we can control in terms of working with the right people, being aware of the nuances of the different tax implications when you move abroad. For example, here in Spain, you might not know that you have to file Form 720 reporting your foreign assets on your Spanish taxes. These types of things that US-based advisors who might be great financial advisors, but they might not know the expat aspect of your current country. And I think building a long-term strategy and maintaining it is very important for anyone, in terms of not panicking. It's really hard to do, so it's almost better just to offload that burden on us and let us manage the account. Or any advisor you're working with, don't try to jump in when you feel the panic. Just stick to the plan. So questions to ask your investment advisor. I'm using the EU as an example, but these should be done in whichever country you're looking at. Are you a MiFID compliant advisor? So are you licensed in the country that you're providing investment advice? I know, for example, when we set up this firm, the way that it worked at the time was if you were a US based advisor, you could get clients in the EU if they were unsolicited, meaning if they contacted you. But US based firms can't advertise, they can't do they can't go out and seek out clients in the EU. So what we tried to do is be proactive about that. My partner Tom and I setting up this firm to make sure that we understood all of the nuances of MiFID, that we were compliant with the tax authorities and the financial regulatory bodies here in the EU, and kind of got ahead of that because it could come to pass probably soon where if you're not licensed in the EU, you can't have clients in the EU. And that seems to be the trend in regulation these days in financial markets, kind of globally, is more national or regional laws in place. And then, looking at what regulatory body are you registered with? How can I check? What's your background? What's your academic background? What licenses do you have? What designations? What's your investment philosophy? Then how they're getting paid. Are you independent? In the EU, so in the US, you often ask, are you a fiduciary? In the EU, it's are you dependent or are you independent? And it's essentially, if you're dependent, you're working for a specific institution, like UBS, for example, you can only sell UBS products, you're getting paid from those products. So in our case, we're independent in that we're not being paid by any products or any company to push products. We're selecting individual stocks. We're only paid by our clients. And I think having that distinction is quite important. It protects you as a client. Some more questions here. Who are your clients? Are they expats? Are they institutions? Are they high net worth individuals? I think you want to find an advisor whose main clients are like you, your background. So are you an expat specialist? How do you manage currency risk? I mentioned that before. What sets you apart? And then what level of service can I expect? Do I get statements once a year? If I have a question or a problem, who do I call? Am I getting pushed to a call center? These types of things. I think as an expat, there's always surprises. So you kind of want somebody that you can turn to on your financial account side anyway, who can help you. Sorry, got a little tickle here. So finally, some mistakes to avoid. This will apply to anyone, whether you're in the EU or abroad. Avoid buying foreign funds, PFICs. Avoid mutual funds, exchange traded funds. Even sometimes private pensions count as PFICs. So you need to ask your tax preparer about those. Buying non-US compliant insurance. There's nuances to this. So if you buy life insurance in the US and you move abroad, it might not cover you if you die abroad. It might. I'm just saying this is something you need to look into. If you buy insurance in the EU and you travel to the US, it might not cover you in the US. So you need to make sure that you're actually covered for the lifestyle and the things that you're doing. Over-investing in your country of residence. Sometimes folks, they move to Czech Republic and they say, I only want to invest in Czech instruments, Czech stocks. That's a big risk. Now understanding the underlying currency exposure of your portfolio. this is a bit more nuanced, but like I said before, there's many different ways to get exposure to different currencies. And you might be, for example, there's indirect, where you own companies who receive revenue in a certain currency. So if you owned, let's say, a European company that was listed on the US stock exchange, even though it's denominated in dollars, it still gets all of its revenue in euros. So you have exposure to the euro that way. That's indirect. And then direct is holding euros or euro-based instruments. Contribution to a non-qualified foreign pension. This is what I was mentioning. It could be a PFIC, so it's important to speak with a tax preparer. Other mistakes, not using an expat specific tax preparer. I think I beat that one to death. Making sure you know that the person you're working with understands the joint tax treaty. Paying high fees for foreign investments, which could have been bought in the US for less. A great example is like a BlackRock S&P 500 fund. If you buy it on a European exchange, it could be twice as much as if you bought the same fund in the US, and you're going to have to pay more in capital gains because it'd be a PFIC. Excuse me. Failure to report foreign financial assets and US returns. This is FBAR essentially, but it's a little bit more nuanced than that. In that next point, failure to properly report a foreign business entity. So if you start a small business abroad or a large business, you need to report that business because you're essentially a business owner then. It's a foreign account on your US returns. And then the last one, we're all guilty of this, do nothing. I think, feeling overwhelmed, once you start doing some Google searches, it quickly kind of spirals. It feels like doing nothing would be your best course. That's normal. I think taking these things in little chunks is the best way to go about it. Just try to understand little aspects of it at a time and process what you can. Try to offload some of the burden to people who do it for a living. Do your research, make informed decisions, and I'll end with enjoy your expat adventure. I think that's we all have made that decision to move overseas, and there's a lot of great things about it, but there's also some things that are probably not as easy as knowing the system your whole life growing up in, and I think it's important sometimes just to remember that. So that's the end of the presentation. I think Hugo, we can jump into the Q&A now.
Yeah, fantastic. Thank you very much for that. Lots of excellent detailed information there. Lots of questions have come up, so let's do our best to get through as many as we can.
Sure.
So if you have an IRA and own US ETFs in that account, do the PREP and MiFID rules apply?
Yeah, a lot of these, let me just start by saying I can't give tax advice. I can only give investment advice. So a lot of these are probably going to be more questions geared towards tax advisors. But for a question like that, that's going to depend on the joint tax treaty in the country that you're a resident in. So I'd have to know which country you live in before I could give general knowledge on that. But typically, I shouldn't say typically, oftentimes, like in Spain, for example, your IRA is treated as a retirement account by the Spanish tax authorities versus a standard brokerage account. So your IRAs or your 401ks in this example are often having those same protections as a pension account, where a Roth IRA wouldn't, or a brokerage account.
Cool. Okay. If you still have a US address, can you maintain your existing US accounts, bank and investment?
Yeah, I think that's a good question. We get that all the time. Usually it's you can until you can't. So if you use your US address to maintain your accounts, oftentimes now the custodians or brokers will look at your IP address, where you're logging in from. Sometimes even if you use what do they call where you use a different IP.
I know exactly what you mean. Yeah, it looks like you're somewhere else.
Yeah. Sorry. Anyway, if you use one of those, anyway, they find out where you're logging in from. They say,
VPN.
Yeah, VPN. Thank you. Uh, they check that and they say, okay, so you're living abroad. Are you an expat? You say yes, and then they'll ask you, well, you need to update your address. So for us, it's kind of a risk mitigation technique. Is just using a custodian who will work with you as an expat and not having any surprises from tax authorities in that state or from freezing your account.
This is more of a tax. I'm going to jump tax questions, and one's about tax returns and things. We have 3 sessions with CPAs tomorrow. Jump on and put those questions to a CPA. Is investing in real estate a better option for Americans in Europe in general, specifically in Italy? My Italian bank discourages it. They advise mutual funds.
Yeah, mutual funds are going to be a PFIC if you're a US citizen, so I'd avoid that. I think real estate, it's a little bit different over here than the US in that a lot of these places, we were just having a conversation about this with my partner. If something is kind of locked in land, like Barcelona, for example, there's not too much space they can expand out from, like San Francisco was, years ago. So that's why we saw such high increases in real estate there. So there's a lot of places in Europe which have been around long enough, they can't really expand. So I think the valuation and potential for capital gains is different than a lot of places in the US. But what we tend to look at is what are your alternatives? Why are you investing and what are the risks? So if you're investing in real estate, we look at, okay, there's going to be liquidity risk. It's hard to get out of that property versus if you invested in a real estate investment trust, which is, easily instantly sold. And then what are the potential gains? So it's kind of risk and reward. If you buy one stock, if you bought Apple in 2008, you'd be really happy today. If you bought Yahoo, you might not be. So I think if you buy one piece of real estate, it's the same way. You could have potentially a lot of capital gain, or it could be a disaster. So I think it's important to review all those issues.
Somebody asks, is EAFA a fiduciary, a financial advisor?
Is it what? Sorry, I didn't catch that. Is it a fiduciary?
Yeah.
Yeah, that's a good question. What we are classified here is being dependent or independent. And we are independent in that we don't sell products. We aren't pushing any particular type of scheme or anything. But the term fiduciary typically is just used in the US. Our US firm, International Asset Management, is a fiduciary. So we follow kind of the same guidelines as both.
So here's a question. If you have no interest in living in the US again and no real connection to it, would you still recommend investing in the US?
Yeah, I think there's a couple elements there, aren't there? There's the kind of emotional side of it, if you want to move on from the US, and then there's the financial side. I think from the financial side, as an American, you need to invest in the US. It makes much more sense in terms of cost, in terms of preparing your US tax returns, the transparency of the accounts, and avoiding any of these, financially burdensome investments abroad.
Let's have a look. What about countries that don't have a tax treaty with the USA? Does that affect investment decisions for expats?
Yeah, absolutely. I think that's, if I knew which country you were talking about, I could probably give a more detailed answer. But that's, I think in the beginning I said taxes kind of drive all these things. So typically, if you were looking at investing in that country versus the US, a lot of the same rules would apply in terms of it's going to be lower cost in the US, more transparency, you're going to get the tax reporting forms, all those issues. But then in terms of how the local tax authorities are going to treat your investments and your gains, your dividends, you'd want to speak to a tax professional in that country.
Thank you. There are several questions about, do you provide services to expats in different countries? Most of them look like European countries, and I think therefore yes.
Yeah.
Contact Shane, and if you want to connect afterwards, I'll drop the website in the chat in a minute. and then you connect with Shane via the website. There are also a lot of questions that are quite personal, and I think that's definitely a question to connect with. So I'm going to try and pull out some questions that are more going to apply to a bit more general. Again, country. Well, here's one about France. Is there a simple, practical guide to interpreting the US-French agreement? I mean, all the tax treaties, I guess. Are you aware of kind of guides to help kind of translate them into layman's terms?
Yeah, I think, PricewaterhouseCooper puts out a lot of information. If you just kind of Google specific questions, PwC has a lot of information out like that. There's lots of kind of expat tax preparers who break down some of those things that are pretty good. I think, you always want to get kind of individualized advice on those issues. I think it's best to do your research first, so you have a good understanding of, all of the things that you think it entails, and then speaking with a professional so you have detailed questions going in is probably the best way to do it.
Okay. Somebody asks, are foreign ETFs similar to foreign mutual funds in terms of being PFICs?
Yeah, so ETFs are exchange traded funds. They're both packaged products, and they're both treated by the IRS as PFICs.
Okay. Somebody else, what is your minimum investment level?
So our minimum is 200,000 US. We do have a minimum fee if you're below that, but you want a financial plan or investment advice. I think just reach out. We can have a conversation if you need some help. Going back to the PFIC issue, I should note that the reason that they're kind of PFICs is they're considered opaque structures. So anything that's considered an opaque structure by the tax authorities, and that they can't necessarily see what's, this is probably too detailed. Never mind. Yeah.
Somebody else, or a couple of people have asked, whether the situation is the same for dual citizens as sole US citizens.
Yeah. That's a good question. Or if you have a spouse who's from the US or, otherwise. So if you're tied to the US in any way, if you're a citizen and green card holder, if you have to file a tax return in the US, then it's going to be the same situation that applies to you. If you're a dual citizen, you have the US. There's a saying that's accidental American. So say you were born in the Netherlands, you've lived your whole life there, but you have the US passport. Same thing applies to you. You're going to need to file that tax return in the US every year, and all the same issues.
There's various questions of which pensions, what types of pensions in which countries, are going to fall foul of being PFICs.
Yeah.
Am I right in saying that there are also provisions in some tax treaties which mitigate that? Somebody asked particularly about a UK pension. I think I'm right in saying the UK has the UK-US tax treaty allows for, I think, the tax benefits of pension savings, but I'm not sure if that counts.
Yeah, I think that you need to speak with like a tax preparer, tax specialist for that. It's really, if you can take advantage of a pension in that country, you should absolutely. There's tax benefits to that, but you want to avoid the tax problems. So you don't want to be investing in something that's a PFIC. And it depends on your specific situation in the country.
Quick thank you to everyone who wrote VPN when we forgot that. Quite a few of those. Thank you.
Kind of stalled there for a minute.
So somebody else asked, does your advice change for expats who plan to stay in plan to live abroad for, a few years versus long term?
Yeah, I think we have a lot of clients in that situation. And I think that's part of the benefit of the financial plan. So we can look at, we project everything over time. So look at, this is where you're at today, let's say living in the EU. And then for this part of your life, you plan on moving back to the US, your expenses are going to change. So I think we do definitely do things differently. And we set up the accounts ahead of time so that when you make those changes, you don't have to make any tax events or any lifestyle changes or any brokerage account changes. we set everything up correctly in the first place.
A couple of people have asked, what was the two firms you mentioned, the brokers? Because am I right in saying some deal were better for some countries, some were better for other countries?
Yeah. So the two firms are Interactive Brokers, which is a US-based custodian and broker. I think they're out of Connecticut. They can trade on any exchange in the world, almost all of them, let's say. And they operate in different countries. So there's an office in Ireland. There used to be one in the UK. I think Czech Republic, kind of all over the world. And the other one is Charles Schwab. And you might be familiar with Charles Schwab in the US, kind of a traditional bank as well. Within this Charles Schwab International and their international office, you're treated a little bit differently. There's different types of accounts. And there's also retail versus institutional with Charles Schwab, which is an important distinction. So there's kind of four groups there: Charles Schwab domestic, Charles Schwab international, and then retail versus institutional. If you're institutional, you can hold US exchange traded funds in some countries. And then both of those, of the two, Interactive Brokers works with US citizens in almost every country. Charles Schwab works with US citizens in a smaller number of countries. So if you're in France, for example, you can't work with Schwab. They don't want to open accounts. And then I guess if we're giving the really detailed answer, in some situations, you can maintain an account with Charles Schwab, but you can't open a new account.
Okay, and that's country dependent as well. Okay, so look, we're kind of almost at the hour. So back to VPN. Somebody says, can you use a VPN to access, other, I suppose, financial accounts in the US while being an expat?
Yeah, you can use a VPN. I think, again, we go back to why. If you can work with a custodian who's happy to let you be an expat and avoid any risks associated with that, then I think that's the risk mitigating answer. I don't know as much about the technical side of it, but I believe that the brokers can see if you're using a VPN, if you have a different IP address every time you log in. So they might ask, where are you logging in from, what's going on?
I'm also, just as we're kind of coming up to the hour, I'm going to drop Shane's Euro-American Financial Advisor's website into the chat. Hopefully everyone can see that. It's euroUSAFA.com. So I've just dropped that in the chat if you can see that. So, there are a lot of questions here, 63 questions, and we won't get through them all. Let's just see if we can find one more. Yeah, what is your opinion on renouncing US citizenship?
That's a big question. Yeah, again, there's like the emotional side of it and the financial side. Just on the financial side, there's some benefits, but there's also some costs. If you divorce the US, there's some exit costs you have to pay. But then you don't have some of the same burdens. So I think it's a big decision to make, and you should probably speak with a financial planner, advisor, and someone on the tax side as well to look at, the benefits and the costs associated with that, because it does limit your options in the future as well.
There are a lot of unanswered questions here, a lot of them personal. What I'm going to do is I'll forward them. Actually, a lot of them are anonymous. I was going to say I'll forward them to Shane, who can, respond on a one-to-one basis, but I'm not sure the questions don't contain the contact details. So if
I think
we haven't had a chance,
just reach out to me. We do free consultations for this. If you're interested, if you have any specific questions, you can set up a Zoom meeting with me and we can get into the details if you want.
if it's just a simple question, I'd say drop Shane an email. The email address is on the website, euroUSAFA.com. Or if you want to, potentially seek advice and services, then book a call also through the website.